Welcome back. Well, it's the first trading day of the week at the Nigerian equities market, and it's countdown to the close of trading. Let's cross over now to the exchange to get an update of the numbers. At this time, market was down 0.11% at intraday. Now, what has changed? Let's talk to Temple. Hello, Temple. Good afternoon. Is the market still bleeding? The index was down 0.11% at intraday. What's happening now?
Good afternoon, Chimaze. The market is really down at the moment, moving downwards further to by 1.24% as we speak. And it's really not funny because, again, if you look at the numbers, the level of transaction is really worrisome. We're doing less than 100 million units of shares traded, and we're doing that for a total value of about 95 less than 95 billion, less than a billion naira actually, and it's really discouraging. I mean, you know how it is. The investors have been taking the funds, taking out flights now as a result of the investment climate that we're having at the moment. You talk about the likes of Nestle, which is a blue chip stock in this market. It has lost 145 naira. Dropping from 1,500 naira now to about 1,335 naira. But that's even in the consumer goods side of things. If you look at the financial services, the insurance sector is not looking good. It's really down at the moment. All the sectors are facing, are looking southward. The banking sector is down by more than 4%. I think as we speak, it should be around 5% right now. And we've seen a huge sell-off in the major names in the banking sector. Talk about GT Bank, Zenith Bank, Axis Bank, UBA. Almost all the banking names are currently down at the moment. The index has shed over 1.24%, as I said earlier, and it is now in the 33,000 region. Diamond Bank is currently the most actively traded stock. It's done some 26 million units of shares, and it's accounted for more than 60% of the sales that we're seeing in the markets, Chimaze.
Now we've seen Diamond Bank and Stanbic IBTC come up with an update, or rather informing the exchange that CBN has debited their account in respect of the regulatory fine. Is that having any serious, impact aside from the volume you talked about? Well, how are the shares of these companies performing at this time?
Yeah, so Diamond Bank is the most actively traded, as I said. It's done some 59% of the total transactions that we've seen. In fact, it's more than 60% of transactions that we've seen. Well, for the Stanbic IBTC has already experienced its own beating last week to the extent that it fell to as low as 45 naira compared to 49 naira that it has been trading at for some time. Right now, the reaction, because these are no good news for the market, actually. Investors are beginning to take flight after the news of Stanbic IBTC came in. We saw that impact, but then for Diamond Bank, investors, tried to still take profit on it. It went as low as 1 naira 15 kobo, which it closed at last week. And then this time, I think it's probably going to end, at around 1 naira 5 kobo or thereabouts. It's flights taking. Speaking to traders earlier, what was discussed was more like this is going to fall below 1 naira eventually, not just because of the fact that we're seeing the risk of sentiment in the emerging market, which is leading to the reason why foreign investors are also making exit, but because of this news from the central bank. And then again, you look at the fact that the politicians have always been talking about the need for this capital to be retained here and assuring investors that we're going to have a free and fair election. And so they should, if at all you need to take out your money, you shouldn't take out everything. This doesn't seem it basically looks to be falling on deaf ears as we speak, because investors have seen the first administration of the government we have right now, and the concern will be what is new if you're coming back the second time. This time, it doesn't look like you're really coming in with some huge promises that will come with some that will hit fruition eventually. So we're seeing high level of skepticism in the market. We're seeing that leading to huge sell-off. We're seeing that bringing about pressure on all the indexes. If you look at the composition, the NSE 30, which comprises a couple of the list of well-performing stocks in the market, it is also in the negative territory. At a point, it was actually down by 23.21%. And that is not too good at all, because that is the composition, the sector that comprises the well-performing stocks in the market. And if that is reading this level of losses at the moment, then it tells you that the market is not in for a good start to the week. Chimeze.
Temple. We can only keep our fingers crossed. Let's see what happens. Thank you for your time. And South Africa and Egypt are among the 7 emerging economies at risk of an exchange rate crisis. This is according to latest survey by investment banking group Nomura Holdings. Also on the list are Sri Lanka, Argentina, Pakistan, Turkey, and Ukraine. According to the report, 5 of the 7 are already in a currency crisis or a program run by the International Monetary Fund. That leaves South Africa and Pakistan as the standouts. Meanwhile, the report suggests that the 8 countries with the lowest risk of crisis are Brazil, Bulgaria, Indonesia, Kazakhstan, Peru, Philippines, Russia, and Thailand. Nomura's findings are based on an early warning model called Damocles, set up to identify exchange rate crises for 30 emerging economies. The model examines a variety of factors, including foreign exchange reserves, debt levels, interest rates, and import cover. And Djibouti's government has decided to nationalize shares held by the Port of Djibouti in the Dorala container terminal in the latest twist in a dispute dating back to at least 2012. The government of Djibouti seized the Dorala container terminal from DP World in February over this dispute. And finally, Zimbabwe's new finance minister, Mutuli Nkube, may scrap the quasi-currency bond note and liberalize exchange controls as part of reforms he plans to implement by the end of this year. The Southern African nation which dumped its currency in favor of the US dollar in 2009 following years of hyperinflation, introduced bond notes in November 2016 on a bid to ease acute shortages of cash. The shortages have, however, worsened while the black market continues to thrive. The notes are backed by US dollars loaned to the government by the African Export and Import Bank and can be used like cash. And that's it on the program. Thank you very much for watching. I'm Chimeze Obi Iwabu.